Very well. I'd like to welcome everyone to the March 2022 IAASB CAG meeting. I'm Jim Dalkin, and we're going to talk over the next couple of days a number of important topics. It's great to see some familiar faces, and we also have some new faces. But hopefully we'll get to see one another again live fairly soon, but for this particular CAG meeting, we will be virtual. I'd like to welcome all participants. Also to acknowledge Tom Seinston is here, who is the IAASB CAG chair. We have Lynn Dewey, who is the IAASB deputy CAG chair, not CAG chair, chair of the IAASB, sorry. Galen Hansen, who is the IASBA CAG chair. Welcome, Galen. And James Gunn, I saw you in the room, and you're managing director of professional standards. We have a PIOB observer for this session, and that's Dave Sullivan. Dave, welcome. Happy to have you join us. We have our official observers, and that's Barb Vanich of PCOB, and George Cabway of the IMF. And we have Don Laglici of IFAC Small and Medium Practice Advisory Group. Welcome all. We have two new CAG observers. The first is Valerie Altbaum of the World Bank, and she is replacing Robert DiTrullio, who has retired. And I'm sorry, we have one new CAG observer. And there are a few people that have issued their apologies and will not be joining us for this particular meeting. I would like to say farewell to a couple of CAG members. Mohini Singh, who has been with the CAG for a long time, I think since March 2015, has moved on. And Robert DiTrullio, who I just mentioned with Basel, and he's also been with the CAG since September 19. He has retired. So farewell. We appreciate all the efforts and all the commentary from those participants. In terms of the CAG meeting, I think everyone knows the protocols. When you have a question, please raise your hand, and typically the hand raising, you would go to reactions, and that's where you can find it. For this meeting, before we kick off, I wanted to see if Tom, if you had any comments for the CAG.
Well, hopefully you could hear me.
Yes.
I'm getting the unstable Zoom connection from time to time, notice right now. But it's great, first of all, to see you. We're getting to a point that I think hopefully our next CAG will be in person, fingers crossed. Every time we think that other events transpire. But this is a really important meeting. If you've been with us for some time, you'll note that the subject matters are quite different on this agenda from where it was 2 years ago. And we've done exactly what we've intended to do, is turn our work plan over, which is now fully approved, and deal with some of the most challenging topics facing the audit profession and assurance practitioners. So we have a number of really important topics on the agenda, and needless to say, from an IAASB perspective, we are all ears. We really need your input and advice today if we are going to fill our public interest mandate. So thank you for being here, and thank you for your service to our board.
Thank you, Tom. I know we had a discussion our last CAG meeting regarding minutes, and there are some minutes from the November CAG meeting, and that was focused on fraud for approval. The minutes have been distributed, and so I just wanted to highlight that. Any comments? With that, I think I want to talk a little bit about the agenda. We have today really three topics. One, we want to talk about PIEs. and then we will go into going concern. And then finally, we will have our private session. So that's the overall plan. With respect to PIEs or public interest entities, Josephine is joining us and she's going to walk us through that. Actually, you're going to walk us through both. But Josephine, I will turn it over to you.
Sorry, thank you, Jim. The screen suddenly got really big and then I couldn't find my unmute button. So here I am. Thank you. Good morning, everybody. Good afternoon and good evening for those dialing in late. Thanks again, Jim, and of course, members of the CAG for the invite today to talk about this topic. Always like to take the opportunity to thank those helping us get here, and that would be Kalina, Natalie and Vili. And of course, a reminder of the working group. We have Chun Wee, Denise Webber, and of course, Dan Montgomery. And actually, to some extent, and I say this every time, this is a bit of a star cast because of course, we've been working also very closely with the IAASB Pi Task Force, to whom I extend my thanks. And again, also to Jeff and Ken. And I think you heard from, in fact, you did hear from Ken yesterday, as did I, because I dialed in for that little bit, who covered the report back on the IAASB side. So the objective of today is actually to talk about the next part of this journey. So we are going to seek CAG's advice and views, first, of course, on the draft project proposal, which is for a narrow scope maintenance standards project. And then actually the PI working group's initial proposals for the disclosure relating to enhanced transparency about independence in the auditor's report, which I do believe that Ken also mentioned yesterday. It's not actually my intention to walk through the project proposal in any detail. Many of you will be already familiar with the project from previous CAG, but I will highlight some key features of the project proposal. But I do recognise there's lots of papers and lots to remember. So we'll trundle through, should take about 10 minutes or so. So if we could move to the next slide, please. So just as a reminder, I talked about that star cast. We thought it would be useful for CAG members to see a more visual representation of the extent of coordination activities since 2019. So throughout 2020, there was obviously ongoing coordination between IAASB and IAASB, including with staff. And of course, we had corresponding members included on the IAASB Pi Task Force. And we had the opportunity, therefore, the IAASB had the opportunity to add some more focused questions from our perspective to the IAASB ED, which of course was issued in January. And then we established our own PI working group in May 2021 to consider feedback from that, from respondents on those specific questions. And of course, then during the period of July to October, we carried out some joint sessions with IAASB, including our joint session with CAG, of course, in September last year. Then in October, we presented a very comprehensive issues paper to the IAASB that provided an overview of the developments of the IAASB project. And then, of course, from the IAASB's perspective, possible project objectives, scope and timeline. And that paper also included, of course, all the feedback from the exposure draft, along with the feedback from CAG representatives and also the deliberations of the IAASB. So clearly from this, you can see there's been quite significant coordination of the two boards on this subject matter. And of course, as Ken mentioned yesterday, that's going to continue as we progress our own project as well. So if we could have the next slide, please. Okay, so in order to streamline the IAASB's project proposals, the overall structure of the PI project proposal actually leverages the structure of the recently approved fraud project proposal. So if you look through the papers, you will see that some of the texts and the paragraphs have been highlighted in grey, and that's to indicate that they're essentially the same as those in the fraud project proposal, and they're only really going to have limited modifications where necessary. In fact, in some cases, just to change the word fraud to PI. But what's not here, but worth a reminder, is that this is a narrow scope amendments project. And so what does that mean? That means that there may be reasons why the IAASB have to make very, very limited targeted changes to our standards. And one of them would be if there are consequences of changes to, say, the IAASB code, that impact the IAASB standards. So we've explained that in a little more detail in paragraph 13, but that's very much part of our framework for activities. So project objectives, we have 3 key project objectives. The first is to achieve, to the greatest extent possible, convergence between the key concepts used in the revisions to the IASB code and the IAASB standards. This, of course, goes to the very heart of the development of the IASB project proposal as well. Then we want to address the differential requirements in the IAASB standards to meet the heightened expectations of stakeholders regarding the performance of audit engagements for certain entities. And I do talk about standards, but our specific focus in this project will be on the ISQMs and the ISAs. And then third, we want to enhance transparency about the relevant ethical requirements for independence applied when performing an audit of financial statements. And that's, of course, in conjunction with the revisions to the code. If we could have our next slide, please. So CAG will already be familiar with this slide from the forward project proposal, but just wanted to reiterate that the IAASB, of course, are leveraging the public interest framework published by the monitoring group in July 2020, in fact. And this slide articulates the 5 broad stakeholder groups for whom the standards are actually developed. But also the important emphasis here is that all stakeholder views must be weighed and balanced in the context of the public interest. And so we thought it was important to reiterate that point here. If we could have the next slide. So, aligning with the new project proposal structure, it is important to formulate the key issues. Now, the key issues for this project are actually more limited than you might see in other projects, particularly those to revise standards. And this is primarily because the purpose of this project, as I mentioned earlier, is actually a consequence of the IASB's work on PI and listed entity. However, respondents to the ED did actually raise a couple of other issues. So the working group concluded that we actually had 3 key issues. So the first, of course, is that there would be increased complexity if the concepts differ across the standards. So if the concepts differ across the IAASB and the IASB standards. There is, in fact, a need for a more robust and consistent approach as to when we make a judgment as to whether differential requirements are appropriate in a circumstance. And there was a need or a call for a need for enhanced transparency in the auditor's report about relevant ethical requirements for independence applied when performing audits of certain entities. So those were the 3 key issues that we felt were representative of our stakeholder views and, of course, of the purpose of the project. If we could move to the next slide. So in terms of the scope, so the actions that we're going to undertake to deliver on our aims, again, narrow scope amendment projects, so a limited number of targeted changes. But if we put transparency to one side for one moment, the actions to address the objective to align the concepts and those to address differential requirements are very much interrelated. So whilst you'll see them set out in the table under paragraph 28 as sort of individual actions or steps, we have tried to make it clear by some cross-referencing and an explanation that there are dependencies. So if for some reason we were never to expand our differential requirements from listed to PIs, then that would question as to whether we actually needed a definition of PI, for example. So it's very much that they're dependent on each other. So bearing that in mind, though, the actions, of course, include considering whether it is necessary to adopt the IASB definition of PI and, of course, publicly traded entity. In terms of the green box, the differential requirements, we do intend to adopt the overarching objective in the IASB code, but we will be developing a more tailored or targeted objective for IAASB for their development of standards, for their development of differential requirements. And of course, we'll develop some guidance to support those judgments as well. We want to undertake a case-by-case analysis of the extant differential requirements for listed entities in respect of ISQMs and ISAs. Now, I will just focus here on it is extant differential requirements. We did notice in the feedback that we got from some respondents that there was concern that we were going to, as a result of this project, create new differential requirements, and that's not the case. It's very much focused on what currently exists today and whether we should expand those. But of course, the objectives and the guidelines can be used later when IAASB consider whether it's necessary to develop differential requirements going forward as part of other projects. So just to confirm that that is extant requirements. There may be a need, of course, to update any application material or other material as a consequence of that work. And then in terms of transparency, the action here is to enhance and clarify ISO 700 to address circumstances when the auditor's report is used to disclose the information that relevant ethical requirements for certain entities has been applied. So we move on to the next slide, please. So rather more exciting. This project is one project, but it actually has two tracks. So you'll recall that in the PI-ED, IASB proposed that the effective date for revisions to the code would be December 15, 2024. And of course, respondents to the ED were actually broadly supportive of the proposal, and that was confirmed in the approval period in December. But for the IAASB's project, seeking alignment with IASB's effective date, which we wanted to achieve, would actually only leave a 12-month implementation period for practitioners to incorporate any changes to IAASB standards into their methodology, into their manuals. So that felt like it just wasn't sufficient time. But the working group were of the view that, in fact, the alignment of the effective date of the code was, in fact, much more urgent in relation to addressing the transparency requirement in the code, but not as urgent in respect to addressing the differential requirements. So it was proposed and supported by the IAASB in October that we would approach this project along two tracks. So we will address transparency piece on a faster track with an aim for approval of an ED addressing only that element in June 2022. And then finalization of that particular part is proposed for June 2023. Then, of course, track 2 will address the other parts of the project, again, much less urgent, aiming for an ED around September 2023 with a final pronouncement a year later. So if we could move on to the next slide. As always, we want to understand what the impact of our work will be. And so this final slide deals with the expected impact. And although this is dependent on effective implementation of revised standards, among other things, it is expected that this narrow scope amendments project will result, of course, greater alignment between the IAASB standards and the code, that the IAASB will have objectives now and guidelines to help support our judgments when determining if differential requirements are appropriate, and then improve transparency for users about the relevant ethical requirements for independence that have been applied in the audit. So I do believe this brings me to my summary now of the project proposal. So Jim, I think if we move on to the next slide, I open up to you now for CAG's advice on the draft project proposal presented in agenda item B2. Thank you.
Thank you, Josephine. This actually isn't new to the CAG because I know we've talked about this at various points. But well, let's see if we have some comments on this. No hands yet.
Okay, great.
Okay.
I see one hand, Jim.
Do you?
Yeah, Daniel Sarmiento.
Daniel?
Hi, everybody. I think this project is very important for us, especially for here in the Latin America region, because we have a lot of discussions about the scope of this term, I mean, PI. And I've discussed this a lot of times with different stakeholders. For example, right now we are conducting an actualization of a RASC study here in Colombia, and it's going to be also in other countries of South America. And the bank itself maybe has a different vision of what a PI really is. So I think it is very, very important to clarify the scope of this, because there's only one sentence that says that a PI is also an entity which is defined like that by regulatory bodies, and is so wide that expression. So in terms of what the code says about what is really a PI, it is very important to unify and clarify this concept, especially for countries of undeveloped countries. These jurisdictions maybe have a lot of large companies with a very small stock market. So we couldn't say those are in PI for our environment. So it's very important to get to one definition in both bodies. I mean, the IAASB and IAASB. Thank you.
Thank you, Daniel. And we do have some more hands now. Akihito.
Thank you. Thank you very much for your clear presentation. I support the direction and the contents of the draft project proposal. Regarding the timeline of track 2, since it is planning to address this over a long time, I think that it is necessary to keep in mind the balance with other important IAASB projects in terms of effective and efficient use of limited resources. So it is important to prepare and follow up on a detailed plan of identified matters to be addressed, considered, and timing of them. That's my observation. Thank you.
Thank you, Akihito. Hilda.
Good morning, or good afternoon to all. Thank you. We are also supportive of the project, and especially that, the terminology between the IAASB standards and ISBA code are aligned. And, also of the way that you propose to take care of this. One thing that Josephine said is very important. This is, about aligning terminology for listed entities for PIEs, and it should not advertently or inadvertently create additional requirements, and especially for non-listed entities and non-PIs, that is very important. And we think we should all be very clear on that and try to work to that objective. Thank you.
Thank you. Tyson?
Yes. Thank you, James. And thank you for the presentation. Also, the European Federation for Accountants and Auditors for SMEs is supporting the project. And we are in favor of aligning the understanding between the two boards, between the IAASB standards and the code. And in addition, we are in support of addressing the different requirements that are in both quality management standards and auditing standards, or ISQMs and ISAs, because this will help to just put in a more clear way how to meet the expectation of different kind of stakeholders. And because our members are serving especially to SMEs and are in majority SMPs, this will help to improve the quality in performing their engagement and reduce to somehow the burden, because they are serving to those clients. And I think this will help to increase the scalability in serving different types of stakeholders. Thank you.
Thank you. Conchita.
Thank you. The presentation is good, and I'd like to congratulate Josephine and our groups for the project. And I would like to say that we look forward to the output of this project and that the expectations set are met. Thank you.
Thank you, Conchita. Wei?
Thanks, Chairman. Hello, everyone. Thanks a lot for the work done by the group task force, and thanks for the presentation. I would like to express express my support for the approach the task force suggested to reach its objective. In my opinion, track 1 is a quick reaction to the urgent need for transparency about the ethical requirements for independence when which are applied, and it's a practical way to reach the convergence. That's all. Thank you.
Thank you. Klaus?
Yes, thank you. Yes, Business Europe is also very supportive of this project. I think it's an important one, and we also support the 2-track approach here, because I also, as Wei alluded to, I think it's transparency issues are important here. So overall, we're very supportive of this. Thanks.
Thank you. Wei, your hand's back up. Did you have an additional comment or?
Sorry.
Oh, no problem. Greg, I was going to call on you anyway to see if you thought some of the public sector issues were resolved, or Greg?
Thanks, Jim. Yeah, as presented, certainly support scope and objectives of the project. I think as it's exposed, some of the finer issues with public interest and public sector will get commented on. I did have a comment on the effective date for consideration, because I didn't see it in the materials, but perhaps it's there with respect to the application of the ethics code in jurisdictions. Not all jurisdictions will be following or directly applying the international code. So in terms of timing of effective date, there can be a gap between when a jurisdiction is able to align its ethics codes to the international code, and then when it applies the assurance standards that align to the ethics code. So in terms of timing, national and other jurisdictions may struggle to implement quickly. And I don't know if there's anything that can be done from a project perspective to address that issue. And then I had a question with respect to the objective to continue to use paragraph 400.8 in the code as a principle for establishing differential requirements. My question is simply, will that conclusion or current objective be part of the exposed material in terms of for comment by stakeholders? Thank you.
Thanks, Greg. Josephine, it looks like that is about everyone who had their hand up, and I will turn it back to you.
Okay, thank you. Well, thank you very much. Lots of support there. Really appreciate it. Some good points on the track 1. I think I really had the 2 questions which came from Greg. One is which is the effective date. Billy might tell me off, but our effective date for track 1 will align with the IAASB's effective date. But essentially, it's always recognised that national standard setters and jurisdictions may have different points and effective dates because they do need to take a bit more time to go through their own due process. So that is recognised, and but we would still want to align with the IAASB effective date so that we don't have practitioners in a situation where they're not sure what the mechanism might be to actually disclose the statement. And in terms of 400.8, certainly it's a good idea to include that in the exposure draft as part of the discussion, but that has already, of course, been agreed and approved by IAASB, so that itself wouldn't be up to the discussion again. More importantly would be whether the IAASB's targeted, more tailored objective actually is appropriate in terms of differential requirements and making judgments on those. So that would be our approach. Hope that helps, Greg. I have a nod. Great, thank you. Okay, so if we could move on to the next part of the presentation on this. So next slide, thank you very much. Ahead of me already, Michelle, thank you. So the second part of the objectives today is, of course, to discuss our approach to track 1. So as we've just been discussing, IAASB have introduced a transparency requirement, and that's for a firm to publicly disclose, and the emphasis is on publicly disclose, when a firm has applied the independence requirements for PI. Now, IAASB didn't actually specify the mechanism for such a disclosure, but they have noted that such a disclosure should be made in a manner that's deemed appropriate, taking into account the timing and accessibility of the information to stakeholders. So that's looking back on the point that, you know, there's a public disclosure requirement there. Now, the PI working group are going to propose to the IAASB that the ED should actually cover 3 important matters. So this is just the track 1 ED, so not to be confused with the track 2 differential requirements. So we're only talking about track 1 now. So the first is to seek views from stakeholders as to whether, in fact, the auditor's report is a sensible location for this public disclosure. Then, secondly, what we'd like to do is offer options to stakeholders as to how ISO 700 might be enhanced or clarified to actually deliver that disclosure. And then also, not here, but there's something that we need to think about is if the auditor is going to make a disclosure, then that might be a conversation they'd like to have with those charged with governance. So we'll also think about what might be changed or what might be revised in ISO 260, which is our communication standard, in respect to this disclosure that might be made by the auditor in certain circumstances. So if we could move to the next slide, please. Okay, so this slide is actually just demonstrating what I've said. What currently we'll be planning an ED for June 2022. And in the ED, we're actually thinking about presenting 3 options for enhancing and clarifying ISO 700. And that's what we wanted the CAG to look at today. So if we move to the next slide, I'll start going through those in turn. So option 1, now quite simply, if specific independence requirements are required to be applied for audits of certain entities, such as PIs, then the auditor should make a disclosure explaining this in the auditor's report. That is, the auditor will be required to make the disclosure. Now, this option, of course, creates a clear mechanism. The mechanism is the auditor's report and a location of the disclosure, and also will promote consistency in auditors' reports when such requirements in the ethical standards are in place. This route, though, would extend the transparency requirement to all circumstances. So that's irrespective of whether the relevant ethical requirements actually require such a disclosure. So IAASB require a disclosure, but other relevant ethical requirements, so other national ethical requirements, may not require disclosure, even if they have specific independence requirements for certain entities. So that's option 1. So that's a requirement. And then if we move to the next slide, so option 2, it's also a requirement. So it's the same as option 1. It offers a clear mechanism for disclosure, but the requirement only relates to circumstances where the auditor is required by the relevant ethical requirements to make a disclosure in the auditor's report. So, or to make such a disclosure. So option 2 will only relate to circumstances like in the IAASB situation where there's something specific in the code about making a public disclosure. This would mean generally there'd be less consistency globally in auditors' report when specific requirements for certain entities were applied, but those independence requirements were not required to be disclosed by the auditor. So essentially, you'll only ever see disclosure where the relevant ethical requirements also require that disclosure. So that's option 2. But again, at least there is a requirement to make a public disclosure in the auditor's report. And then we have option 3, which is the next slide. And I'm really trying not to confuse you. So, but the next slide. So option 3, there's no actual requirement in option 3. This is basically a situation where the application material would explain that in certain circumstances, the auditor may disclose that specific independence requirements were applied when the relevant ethical requirements required that transparency. It does, however, clarify where the disclosure can be made. It will state that the disclosure can be made in the auditor's report. It will also offer illustrative material of how that might be disclosed. But it may also then create more inconsistencies in practice because there's no actual requirement now to make a disclosure. And in essence, there is a concern that this could actually undermine the work of the IAASB in seeking to provide greater transparency for stakeholders. So that's option 3. So essentially we have the 3 options. The first option again is that in all circumstances where specific independence requirements for certain entities have been applied, the auditor would make a statement to that fact in the auditor's report. The second option is a requirement where you have specific independence requirements for entities, and those independence requirements also require the auditor to disclose that fact. And then option 3 is your application material option, which just alludes the auditor to circumstances where disclosure might be necessary. So if we move on to the next slide, and we're straight into the question. So Jim, back over to you. Perhaps we could have CAG's advice now on the approach that we're going to present to the board and any other comments they might have on the options provided. Thank you.
Thanks, Josephine. I'd like to hear what everyone's thoughts are with respect to the options and what is going to be presented to the board. So I'll check and see. Paul Munter, how are you?
I'm good, Jim. Thanks. Generally speaking, more transparency is better than less transparency. So I'll state that as a fundamental premise. And so that leads us to be inclined to be more supportive of option 1. Option 2 would be second preference, and option 3 would be third preference in that order, I think. The other thing I think I'm curious about more than anything is, and this kind of goes back to Akihito's point a moment ago about balancing projects and the board's available resources. I think the board is in some stage of a post-implementation review of the revised ISO 700. And so I'd be interested in perspectives about how this project interplays with other efforts the board is working on with respect to the audit report more broadly. Thanks.
Thank you, Paul. Hilda.
Thank you. It's not such an easy choice, actually. But again, if you go back to the principle of this should actually not create additional requirements also related to transparency for non-listed entities and non-PIEs. And this is about ISA 700, so the standard on the audit report for all entities. We would very much hesitate to go for option 1. So then the choice is between option 2 and option 3. And again, there that this is for ISA 700. So the overall statement is getting us into a dilemma. If we look at the European Union, option 2 is what we basically need to do, but only if you are a PIE. But you do not have to look at that in the same way if you are not a PIE. And so that's why we basically hesitate between option 2 and option 3, because of the fact that this is in the general audit reporting standard. So is this not something that should be considered maybe in ISA 701, question mark? So that's kind of the considerations that we have with this, where that's in ISA 700, the general auditor's report statement, but it is to deal with considerations just for specific entities. And this creates a little bit of a dilemma that we have difficulty with dealing with. Thank you.
Thank you, Hilda. Klaus?
Thanks. Very much reflecting on what Hilde said. You could come to the conclusion that, of course, transparency is always good, and which it is, and that would lead to option one. But I also hesitate to promote option one here, but very much for the reasons that Hilde just spelled out from a European perspective, or for European business perspective. That would leave us between option two and option three. I personally don't really like option three, I would say, because that does not bring enough clarity, I would say. So for me, option three is not really an option, if I can put it that way. So the issue here was, I would probably prefer option two, but in the project, I think it's fine to ask constituents about all three options, because there are different viewpoints and different perspectives that can be put on this, depending on how you frame the disclosure requirements. Thanks.
So you would prefer two, but
yeah,
think that we should ask if it's for all three options. Okay.
Yes, I think it's important to get the viewpoints of stakeholders on all three options.
Good point. Paul?
Yeah, I would be supportive, I think, of posing all three options. Even for SMEs, not surprisingly, we are concerned about impact on the SME or the non-PI end of the market, just as Hilde has articulated. So we're also a little bit stuck between, I guess, two or three, as opposed to option one. We do feel it important to, as far as possible, get a differential approach that is going to be scalable for the smaller end of the market.
All right, I think we're getting some consistency, at least from your perspective. Kazuhiro.
Thank you, Chairman. I have a brief comment. I understand option one exceeds IAASB standards because if a particular independence requirement is required over certain entities, option one requires it to be included in the audit report, regardless of whether or not the ethical requirement, relevant ethical requirement have such a requirement. It seems that there are not a few users of financial statements who think that the independence of accounting auditors is not only an ethical issues, but also an issues that can affect the quality of audits. And it is easier for users to include such information in the audit report, saving the trouble of searching such information. So therefore, from the standpoint of users, I welcome the set option one for comment. Thank you.
Thank you, Kazuhiro. Daniel.
I think it's a very interesting discussion, and it's also interesting the three possibilities that the project gives. But I think in terms of what the objectives of an audit under international standards, especially aimed to large companies or PIs, I think it's, in my view, it's more structured option one. It's more specific, and it gets more comparability among the different reports of auditors around the world on the same kind of entities. So I think it's better for me, the option one. Thank you.
Thank you. Hussein.
Thank you. I'm a little bit confused about as ISA 700 require auditor in the audit report, after opinion section, state about relevant ethical responsibilities. And the objective of this project is to align as for transparency audit reporting with the IAASB PI project. Therefore, I think it's better to choose option third because current ISA 728 paragraph state that in separate section state relevant both independence and ethical about independence of auditor and ethical responsibilities. Therefore, I think here there should be need to some clarification about this part. Therefore, I think, in my opinion, it's better to follow option third with option third. I think it's both option one and option two also possible, but when I look at the project objective, I think it's better to I prefer option third. Thank you.
Thank you, Hussein. Do you think that it should be asked to respondents which option, or do you think just two? Or
yeah, both all option can be asked for respondent, but I think, in my opinion, it's better to third option because it needs more alignment, more clarification about the statement in audit report to express ethical issues, ethical responsibilities of auditor. Current standard require to explain ethical responsibilities.
Thank you. Thank you. Josephine, you have your hand up. Did you want to respond to some? We still have some more to go, but
I just wanted to chime in. I mean, it's this is actually very helpful because our CAG representatives here are actually giving us some of their own views of which of the options they would prefer. But one of the things that we'd also like to hear is, and we have heard that from some CAG representatives already, that we should ask the question, we should offer all three options in the exposure draft. So it'd be quite useful to hear that whether that seems to be a sensible approach to still propose those three options in the exposure draft as a potential way forward, because we'd like to hear that as well. But I want to hear everything because it's all very, very helpful for feedback and information gathering. But yeah, just as well, perhaps if we could hear about whether you think those three options should be included in the exposure draft. And yeah, and I can make comments on the auditor's reporting project after. Thank you.
Thank you. Thank you, Hussein. Wei?
Thanks, Jane. I would like to make a quick comment on the options. I agree with the view that option 3 is very weak in providing transparency, and option 2 operates well when disclosure is required by RERs. But it creates consistency when disclosure is not required by RERs. And option 1 makes the disclosure requirement very clear and shows the attitude of IAASB. So I prefer option 1. And if there is a choice, if there is a preference order for 2 and 3 is option 2 first and then option 3. So basically, that's option 1 and option 2 and option 3. That's my preference order. Same with mounters. That's all. Thank you.
And do you think all options should be presented in something that goes out to see what the respondents say?
In my view, option 3, I think mentioned by some CAG member, a little bit not so maybe refined to put that option into the disclosure draft. That's all.
Okay.
Thank you.
Thank you. Galen? Oops, I think you're on mute, Galen.
I apologize. So thank you, Chair. I strongly support option 1. I think it's simple, it's clear, it removes all uncertainty. As far as the exposure draft, I think it's fine to put all of these options in. To me, option 3 is just not acceptable. I mean, I don't think users should be. It should be necessary for them to search for where this information might be, whether it be on the firm's website or in a transparency report or heaven only knows where else. I just think the audit report makes it very clear as to where the information would be needed. And I do agree with Paul Muncher's comment that more disclosure is usually better than less. So I think option 1 would be my pick. Thank you.
Thank you, Galen. Well, we seem to have some mixed feedback here, which I guess that's good to have from the CAG. Conchita.
Thank you. My take is option 1, but if it is for information gathering, that the initiative would like to know the views of the respondents, perhaps just show option 1 and 2. That's all. Thank you.
Okay. Okay. Again, we have some diversity of opinion here. Yazar?
Thanks, Jim. In fact, yes, I was just going to start by saying that we do have a divergence of views, even here among ourselves, and then certainly once the exposure draft is open for consultation, certainly there will be, I think, a wide variety of input coming back. I'm really appreciative of the discussion today. I think all 3 options should be put on the table for input. And I think what we're really looking at here is the big trade-off between transparency and consistency. So I think it would be also helpful to try to reflect a little bit on the mitigation measures to deal with this trade-off. And if we can also have some input coming back on how we can make each of these 3 options work, including the mitigation strategies to deal with this trade-off, I think that would be very helpful. Thank you.
Thank you. Any other comments? Yes, I don't. Okay, you got your hand down. All right, Josephine, I'm going to send it back to you.
Thank you very much. And I think there was one particular question, which was from Paul about the auditor reporting project more broadly. And in fact, actually, Dan Montgomery, who's on the working group, is looking after our auditor reporting group. So he's been very much involved in this work. And in much of the feedback that we received from that implementation review, that feedback's gone through to the various different projects to which they relate. So the going concern project, the fraud project, and of course the PI project. So we are very conscious that there is a lot of focus at the moment around the auditor's report, and there may be some impact on the auditor's report from various projects coming down the track. And so it's important for us to progress our projects and work out what needs to be done that's in the public interest and meets our stakeholders' needs. And then we'll stand back from that and think about, to your point, Paul, the wider impact on ISO 700 or the actual auditor's report. So hopefully that helps. But I think really just to make sure you didn't have any concern. We're very much aware of the auditor reporting project, and we're all closely working together. Okay, thank you. So, Jim, that actually concludes the presentation on the listed entity and PI project. I believe I'm perhaps even half an hour early.
You are a little bit early here, so
should we take
let me see what time it is here. Well, perhaps what we can do is we had a planned break, so why don't we take our break and why don't we reconvene at 8:10 Eastern Standard Time, so that we'll have everyone come back then. You can do going concern, and then we'll move into our private session. Welcome back, everyone. Give everyone a couple seconds to come back on. Billy, did you have a couple of comments that you wanted to make?
Yes, please, Jim, whenever you are ready.
It looks like there's a couple people that are still out, so let's wait one more minute here.
Okay, that's fine.
Okay, I think you can go.
Thank you, Jim. I thought just before we started with the discussion around the going concern, and apologies, similar to Josephine, I was scrambling for my raise hand and mute buttons earlier, and I couldn't get to the right button soon enough. But I think, you know, when we get into the project proposal discussion on going concern, the question that Paul raised earlier may possibly come up again, and that is that we are currently busy with 3 projects that potentially touch us on the auditor's report, and that is the PI project, which we've just discussed, this project on going concern, and then also the project on fraud. And I think what is important, the way that we are trying to approach this, and actually in the issues paper on the going concern project proposal, we did highlight in paragraph 29 of that paper that this is clearly a consideration. However, I think the approach we want to take is that let's take each of these projects and do what is right for the project. In each of these projects, transparency in a particular context is a very substantive issue that we need to discuss. And I think those substantive discussions need to happen, and the board needs to land on a position with regard to those transparency issues. Obviously, effective date and implementation will become an issue as we get to the end of each of these projects. And I think there are different things that we need to consider then in terms of market impact, stakeholder needs at that time, and obviously also effective implementation. I do think it probably plays a lot more on the 2 projects on going concern and fraud, less so on the PI project, because remember, as Josephine highlighted, the whole idea that we bifurcated that project to 2 tracks is so that we can complete track 1 fairly quickly, so we can align with the effective date of the ethics of IAASB in terms of their recently approved project proposals. So I guess in summary, we know it's a consideration, but we also want the substantive discussions to take place and that we do what's right for each project, and then we can look at that as we get to the back end of those projects. Thank you, Jim.
Thank you, Billy. Josephine, I'll give you the floor again.
Oh, thanks so much, Jim. And I was so pleased and intently listening to the previous comments from the CAG. I actually forgot to say thank you for all your feedback on the PI project proposal and the options. It's really very much appreciated, and we'll be able to share that with the board next week, of course. So going concern, I think we have just over an hour for this session, but perhaps I can beat my already quick time through for you. Thanks again to Kalina, who is practically with me all the time on all these projects now. So thank you, Kalina. And of course, thanks to Sally Ann and Beverly, of course, for all their work supporting this project. We have Ado, Wendy, Isabel, Renee, and Susan on the working group. And thanks to Billy for keeping us on the straight and narrow as well. So the objective today is to obtain CAG's feedback on the project proposal that we'll be presenting to the board next week. And as with PI, I'm going to take the project proposal as read. I won't cover it in detail at all, but I'll highlight some of the aspects of the work that we've done so far and some key aspects of the project proposal. Just as I said earlier, there's so many papers for you to go through. It's quite nice to have these reminders, I'm sure. So if we go to slide 1, Thank you very much, Michelle. It may seem, of course, like a really long time since we presented Going Concern to CAG, but you'll recall from the September 2020 and March 21 meetings that we have, of course, been performing lots of research and information gathering activities to ensure that we do, in fact, have a very comprehensive evidence base to support our project proposal. We had roundtable discussions in autumn 2020, and in the background, we carried out desktop review of academic research. And of course, we took into account activities and initiatives of others on this topic, particularly auditing standard setters and regulators. And then, of course, we released the discussion paper, and we have all the rich feedback from that as well. So if we could move to the next slide, please. So in May 2021, the IAASB discussed another very comprehensive issues paper that included all the evidence from the information gathering research I just mentioned. And it also proposed at that time a way forward for the various topics with a view of developing the project proposal and, of course, presenting it to the board this month. On the whole, the board were very supportive of the working group's proposed actions and reiterated some important aspects of the project, which we've also set out in other actions on paragraph 37 and ongoing activities on paragraph 38. And those include collaboration with other working groups at the IAASB, such as the fraud working group, of course, and then the importance of our continued dialogue with others in the financial reporting ecosystem, including continued liaison with our colleagues at the IAASB, which actually takes me neatly on to the next slide, please, Michelle. Thank you. So participants in the roundtable and many respondents to the discussion paper strongly encouraged the IAASB to collaborate with the IASB on the topic of going concern. And that's, of course, quite frankly, because of the various links between the financial reporting requirements and then, of course, the auditing requirements. And a lot of comments, the majority of commentators noted that more needed to be done in respect to financial reporting requirements as well as audit requirements. So in addition to the IAASB's normal contact with the IASB, which is fairly regular, this slide is just highlighting those touch points where going concern was specifically highlighted or discussed. So staff held a meeting in July 21 with IASB staff to discuss all the feedback we had received from our stakeholders, where they commented specifically on enhancements they believe are necessary to the financial reporting framework in respect of going concern. We, of course, reiterated this feedback in our formal response to the IASB's third agenda consultation, where they very much discussed the topic in that consultation of going concern and some aspects of that could be enhanced. And we did, of course, note the important message we heard from our stakeholders that it is, of course, in the public interest that the IASB prioritises a focused going concern project. And then at our February meeting, the IASB did give us an update on their work plan and activities, including feedback on the third agenda consultation, noting that a going concern project was one of the most commonly suggested projects, which of course is positive to hear, but we do of course have to respect that the IASB received many requests and rather like our own board still need to work through that feedback and determine the key priorities. So that's of course an ongoing activity for them. And the main point here, of course, is that we will continue to liaise with the IASB staff going forward on our going concern projects and, of course, other matters of collaboration. Okay, thank you. Next slide, please. So this brings us to our going concern project objectives. And again, we're matching the structure of the fraud project proposals. So the going concern objectives were derived and summarised from what we call the key public interest issues presented in our May 21 issues paper. So for our objectives, our aim through our actions is to promote consistent practice and behaviour and facilitate effective responses to identified risk and material misstatement that's related to going concern. And through that, we want to establish a much more robust evaluation of management's assessment of going concern. And of course, reinforce the importance of exercising professional skepticism. Then we also want to strengthen the communication and reporting requirements with respect to the responsibilities and the work of the auditor in relation to going concern. So those are our three key aims. If we could move to the next slide, please. I've actually already covered this slide in the PI presentation, but of course, as part of every project proposal, we want to make sure we have our public interest framework represented. So Michelle, if we could move to the next slide. Thank you. Okay, so the project proposal has articulated the challenges and issues raised by our stakeholders as key issues, and those will be addressed by the project. These are detailed in section 5 of the paper, so I'm not going to cover all of these in detail here, but to maybe touch on a few. Similar to fraud, stakeholders believe that a stronger link to auditors' work in respect to ISO 315, that's risk identification and assessment, and of course how that plays into the auditor's identification of events and conditions related to going concern was really needed here. And then in terms of management's assessment, there was concern that reflected by a number of stakeholders that the auditor's work in this area doesn't really reflect the more robust concepts we have in ISO 540, including, for example, where management assessment includes a particular method or assumptions or data. And there was also concern expressed that communications with those charged with governance is not actually sufficiently robust in the current environment, and nor sufficiently timely, and that the auditor's report is not sufficiently transparent in relation to the auditor's work or their responsibilities, along with confusion expressed about the material uncertainties paragraph and its relationship with key audit matters or emphasis of matter paragraphs. So if we move to the next slide, please. Okay, so there's quite a lot that's squeezed into this slide, and of course the detail of this is in section 6, but also I suppose it's a summary of the scope, and visually it's trying to emphasize that whilst actions will be primarily revisions to the standard, it's not considered to be a whole-scale change, primarily because the key issues we want to address are actually fairly targeted. But also there was very positive feedback from our stakeholders that the standard wasn't in need of complete rewrite. It's not completely broken. And so we do have to take that into account. And that's why, even though it is revisions to standard project, they will be targeted as well. So in that situation, we've actually bundled our objectives A and B together as well, because some of the actions we're proposing actually address both these objectives. So taking a simple example, our action to improve the integration of the work under ISO 315 with the work under ISO 570 will in fact enhance the auditor's understanding of events and conditions, which in turn will then support the auditor in making a more robust evaluation of management's assessment of going concern because of this greater understanding. So that's why we felt that it's better to bundle these two objectives together. And there are other situations where there is overlap as well. But to pick some of these actions out specifically, there were also calls to consider the timeline for management's assessment period, and also whether the assessment period actually seems reasonable given the circumstances of the engagement. But of course, our caution here, and this is for some of the other aspects as well of our work, is that we do need to consider the reporting requirements for management in this regard. There is some confusion about some of the terminology used in the standards, such as material uncertainty and significant doubt. And so there are possible actions here to clarify those through better descriptions or perhaps through definitions. But again, we have to be careful not to add more confusion, of course, and ensure that those concepts are aligned with the reporting frameworks where they're related or where the words are used as well in reporting frameworks. So we will bear all of that in mind. We'll be thinking about enhancements in respect to the auditor's use of technology. Some respondents suggested including guidance on the use of predictive models, for example, or when looking at anomalies, when testing large sets of data, perhaps the auditor would consider looking at those through a going concern lens as well. So there are some areas that we need to think about. And then in terms of strengthening communications and transparency, we received really positive feedback in this area with a clear majority that more was needed in respect of both communications to those charged with governance and also greater transparency in the auditor's report. So enhancements regarding as well, enhancements when the auditors may actually need to communicate to external parties, including when no further action by management or those charged with governance is undertaken. So quite a lot in that objective for section C as well. So the project ongoing concern will also include developing non-authoritative guidance for various auditor reporting requirements where some confusion has been cited. So for example, there may be some non-authoritative guidance we could create for differences between CAM, emphasis of matter, and material uncertainties related to going concern. So explaining the differences between them and how they interrelate. And of course, very importantly, as I've mentioned earlier, we will of course focus some of our time on our continued dialogue and engagement, requiring efforts from others in the financial reporting ecosystem. So that's very much part of the scope as well. So if we can move on to the next slide. And then, of course, the impact of this project, we expect to see improved audit quality through the consistent application of the enhanced requirements. And we would want to better meet stakeholder expectations through the enhanced communication and reporting. And of course, we'd like to see reduced inspection findings in this area. And before I move on to the next slide, I also want to mention that section 7 gives an indication of our proposed timeline. As this is, again, targeted revisions project, we aim to seek approval of an exposure draft by around March next year, with an aim to discuss responses around Q4 next year, and then that would be looking to seek approval of a final standard by June 2024. So after which time we will then develop any first time implementation guides as necessary, which we will learn more about as the project progresses. And of course, we factored in the need to obtain input, of course, from CAG as the project progresses as well. So that's all in section 7. So if we could move to the next slide. And Jim, back to you now to seek CAG input on the draft project proposal. Thank you.
Thank you, Josephine. And just to remind everyone, this is for the draft project proposal. It seems like we have some comments here. Barb, nice to see you.
Nice to see you and everyone else too. I'm very supportive of what was put forth in the project proposal. I think there are a lot of good ideas there that would greatly improve audit quality with respect to going concern. Specifically for item number 3, the information from sources external to the entity, I would encourage the working group to be cautious with your wording. The way it's drafted in the paper, when you talk about readily available, you know, I think there are lots of cases when you would not necessarily need third-party information, and then there are cases where you probably should get third-party information. And so I don't think you should emphasize whether it's readily available. I'd encourage you to think about, you know, how subjective the assessment is. And so, for example, I think in our space, there are a number of development stage companies that get going concern opinions all the time, every year, because they've not reached kind of a viability stage. And in that case, it's probably not important for the auditor to get information from a third party. But I think that when you have a company where the decision is much more subjective, you know, I don't think it should be based on whether it's easy to get third-party information. There may be circumstances where the auditor should get third-party information in order to reach the right conclusion. But again, I do applaud the idea of adding something like that. I am also very supportive of considering how ISO 540 interacts with this standard. I think particularly, maybe not in its entirety, there are parts of the standard, for example, understanding the method used to develop an estimate that may not be as important, but with respect to significant assumptions, I think that's a very important area, especially when the auditor is really looking at the company's plans. And that's an area where I think that's very important. With respect to professional skepticism, just food for thought, it seems to be a theme over a number of projects where you want to emphasize robust professional skepticism or more skepticism. And I'm just not sure that doing that really, you know, I'm not sure how you would explain to someone how they could be more professionally skeptical in one area over another. And so if you're going to end up emphasizing this in every standard, it may be a good time to just take a step back and just encourage professional skepticism throughout the audit, since it's a keystone of having a good quality audit, and maybe not emphasizing that. I assume that if you're emphasizing in some cases the auditor should be more skeptical, does that mean in other circumstances it's okay to be less skeptical? And I do again also support the tie-in to risk assessment. Maybe food for thought is not only do you think about whether there's a risk related to going concern early in the audit, but you may need to think about the effect of a going concern on the risks of material misstatement in other areas. Certainly a company that's on the verge of having a going concern opinion, that does increase incentives and pressures to potentially commit fraud or even to have more of a less degree, but still some bias introduced into estimates. But again, very supportive. I think the team's done a good job, and thank you.
Thank you, Barb. Akihito.
Thank you. Thank you very much for the presentation. It's very helpful for me. I support this project proposal. I believe that it is very important to collaborate with IAASB regarding IAS revisions and to communicate with IAASB with detailed issues to be considered, taking into account their current and upcoming busy schedule. I also believe that transparency in the auditor's report when significant doubts are identified is very important, and that it may be necessary to take action to improve the current boilerplate issue regarding MURGC, and also to require specific disclosure requirement of auditor in key audit matter and elsewhere when it is judged that there are no material uncertainties as a result, I think. Finally, regarding professional skepticism, I believe that when emphasizing this by using action-oriented language, such as reconsider, keep in mind to the consistency with other ISAs, such as ISA 240, 500, 540. That's my comment. Thank you.
Thank you, Agihoso. Christian.
Yes, thank you very much, and thank you for the presentation. From a practitioner view, first of all, I think we are, from Accountancy Europe, we are still very supportive and deem this approach to be the right approach. We still want to stress that we believe there's no silver bullet as a solution to this topic, and that we should keep in mind that there's not this is not a tick the box exercise, as we just see in Europe. The situation that we're facing a new situation where we have to take things into consideration on a very individual basis. So at the end of the day, I think is really key to understand what is the concept of the reporting. So looking at a holistic approach, it is deemed necessary that we need to understand what are the reporting requirements on which the auditor will then opine. So from that angle, it is really key to also move towards those who report to be more explicit on the going concern in their financial statements, so that the auditor can actually weigh in on this explicit statement. So I think this is it from my side. Hilda, I'm not sure whether you want to add from an Accountancy Europe perspective.
Thank you, Christian. Hilda, I guess you're teed up and you're actually next anyway, so go ahead.
I was about to say if I'm allowed to speak next. Thank you very much. Christian has definitely made our main comments, and you might recall that we have referred to earlier work that Accounts Europe has done on actually both fraud and going concern that we issued a little bit more than a year ago, and part of it is standard setting, but that's not all of it, because indeed a holistic approach is needed. And unfortunately, what we did before was looking at some corporate failures, or why we looked at it was because of corporate failures and also the COVID-19 situation. And unfortunately now with the Ukraine war, we again have a heightened focus on this particular matter, ongoing concern, because the risks are there in certain sectors and in certain countries. This gets heightened attention again in Europe, unfortunately. One specific point, there was a reference made by Josephine to, efforts to coordinate and to discuss with the IAASB, and it is really very important to do that and to continue to do that. We have responded to their third agenda consultation, and we put this matter of going concern very high on our wish list as matters that they would look at again, because their original proposals was very much to refer much more to the judgment of management to consider whether to make disclosures or not in general, but also as far as going concern assumptions. And, we basically asked them to do it the other way around, to almost mandate some going concern assumption disclosures. And it might take a lot to actually have them change from what they had originally in mind to what us and some others, and potentially yourself as well, ask them to look at. So it would be very important, we believe, that you, from the point of view of the audit standard setter, continue to liaise with them and continue to maybe even put some pressure on them that, certain matters that you would want the auditor to do, as Christian pointed out, can only be done if actually management is making certain disclosures. We understand also that there will be a discussion in the IAASB board next week on this timing, 12 months from when, from the previous year end or from the issuance of the audit report. That's an issue that indeed we had identified as well. Some believe that the period should be a bit longer and maybe extend to, as from the audit report plus 12 months. But, there is one consideration for auditors that will be very critical there, and it is that the period would need to be aligned between what in your jurisdiction management is required to abide as a period for going concern assumptions, and what the auditor would do. If that's not aligned, that would be really, really difficult to work, because if the period for the auditor would be longer than the period for management, it's very difficult for the auditors to force management to do additional work and to make additional calculations. So hopefully that's something that can be kept in mind. Thank you.
Thank you, Hilda. Josephine, do you want me to stop here? We have about 7 more people.
Sure.
Or would you like me to continue?
No, I'll just go back to a couple of points. So I don't, like before, forget totally at the end to say thank you for all these marvelous comments, but thank you very much. Bob, thank you. Of course, you were just instrumental in the development of the wonderful 540. So thank you so much for all your work in that. I just did want to say that. But yeah, some good cautions actually on the UK third party. That was a good point about readily available and just being a little bit tighter with our wording there. So that's really helpful. And professional skepticism, yes, we are aware of this and in some of our other projects, and we are thinking about that in the background as to how that would be appropriately emphasized in other standards without, of course, just saying the words, or also saying the same thing over in several standards where it could be dealt with in one place, for example. So that's very much on our mind as a board of how best to deal with that. So thank you. Hito, the point about what we call the close call, the close call situation and auditors being more transparent about that. That came through as there was a particular emphasis on that. It came through from respondents' comments in respect to auditor reporting, one area where they really did want to see some requirements in that particular area. We are, Hilda and Christian, we're very conscious that there are reporting requirements, financial reporting requirements that management is required to adhere to, and therefore in some circumstances the auditors can't do the job of management or do the auditing or accounting through, the accounting through the back door, as it were. What we have done in the project proposal is emphasize the fact that we are trying to emphasize where we can act, and that's what we're being transparent about. And in situations like, for example, where there is a timeline for assessment, where there could be a particular action we can't actually follow through because of the reporting requirements, then we've tried to highlight those. So the timeline for assessment, for example, yes, we may not be able to go as far as we want to in that particular action. However, there may be other things that we can help auditors with when they're looking at that timeline and when they're performing that evaluation of management's assessment of going concern. So the project proposal, as it's set out now, is focused on what we can do within the context of the current reporting standards, and then there's a little bit of nudging where we may be able to do a little bit more if there is room in the accounting standards to do that. So hopefully that will give you some clarity of how we've approached this. So yeah, so Jim, back to you.
Chairman Jim, may I just add another question to Josephine?
Okay.
Sorry for that. Josephine, have you also taken into consideration, like the situation we're facing in Europe with the Ukraine, that preparers have already prepared the financial statements? We're close to filing the audit opinion, and then such a situation occurs. I think this is really something that has now become, well, virtual to everyone, that we are done with the audit, we're done with preparing the things, and then once a sudden, we face a totally different situation. And I think this so far is not really reflected because we didn't take it into consideration, let's say it this way. Sorry if I interrupted you.
No, not at all. Not at all. If I may, no, that's a very good point. The subsequent event issue is something that we do need to think about. And we just haven't gone into the granularity into the project proposal, but yes, we'll take that on board. Thank you.
Thank you. All right, next up we have Paul.
Sobel, I presume?
Yes.
Okay, because I saw Paul Munters also had his hand up, but I thought I beat him to the punch. I mean, overall, I'd really like to show my support for this. I think the direction is right. I like the scope. A comment I would make, objective number 2 about more robust evaluation of management's assessment, I think is extremely important. I understand why in the scope slide here, you've merged that together with objective 1, because I do think there is a lot of overlap, but worry a little bit that, maybe over time, the importance of that objective, maybe loses a little bit of esteem, so to speak. And my experience is that management typically has a lot of informal ways of assessing and tracking I wouldn't say necessarily just going concern from a financial reporting standpoint, but their viable concern relative to survival. And that's why I think this can be so important in really understanding their evaluation, their assessment, because that will then help better inform the auditor's assessment as well. So I'm probably stating the obvious here, but just wanted to make sure that that objective didn't get kind of pushed to the background. Thank you.
Thanks, Paul. S. Don?
Yeah, can you hear me?
Yes.
Okay, thanks. Thanks for your presentation, Josephine. The SMPAG is very supportive of this project. I have 3 points. One area of particular interest is the definition of material uncertainty. I know you mentioned that there were a number of definitions that you would potentially be looking at. The second is that there is a lack of understanding, I think, on what additional procedures are required to be performed. How far does the auditor have to go to corroborate what management is telling you, and how challenging that is? If we think about our current times and the projections that management might have prepared, and looking at, okay, well, might there be another shutdown or number of shutdowns, and what will the length of those be, and how will that impact their ability to continue business? So it certainly is challenging, and any guidance on how to establish a more robust evaluation of management's assessment, I think, would be extremely helpful and timely in this environment. And my last point is, I think it would also be very positive to provide additional guidance on strengthening communication between those charged with governance and the auditor, because that can only enhance our understanding. We can never know or see inside the head of management or understand all the nuances that they put into those evaluations. So parameters around how to direct that communication, I think, would be a very positive thing. Thanks.
Thank you, Don. Hyson.
Thank you, Josephine, for a very good presentation of this project. We are very supportive of the idea of dealing with this issue of going concern, which is very much related with all other ISAs. And even today, when the issues of going concerns are more evident than before. We think that the discussion between IAASB and IASB is very much important, because will clarify different viewpoint of going concern from preparers and from auditors. And of course, we are representing an organization that as a member, SMPs, basically, we are in favor of scalability in treating things, and we have seen that this is an idea to be further developed. So we want for the task force on this project to continue to use clear, simple, and concise language, and of course to address this scalability issue, because it will help to address public interest better. One thing that we may consider here, we would like the scalability to be also related with less complex entities, which is another issue that should impact the profession that will be involved in this issue. So in general, I am in line with Hilda and Christian on these issues, and we hope to see that this work will be very good for the auditors. And from that point of view, we are supportive. Thank you.
Thank you, Hyson. Greg.
Thank you, Jim. So I just wanted to echo comments that I've heard concerning support for working with the financial reporting standard setters as well. I don't think you can address this issue independently of financial reporting. And this is an example where when the two standard setting communities don't work in harmony, it gets very difficult for the auditor to do their job. So I just wanted to encourage the continued collaboration that is referred to in the background material, and to emphasize how important I feel that it is. Specifically in the public sector, I think we need to do more to help management and those charged with governance truly understand that this assumption is fundamental to their assertions, and to help them understand they have a responsibility with respect to their conclusions about the assumption. And that may apply beyond the public sector. And perhaps a good example is a less complex entity where it is fundamental to what they're putting forward, but they may not realize or accept responsibility for that assumption. And it creates tension between the auditor and management, or the auditor and the entity. Secondly, I just wanted to note that also similar to less complex entities, I suppose, going concern can be straightforward in the public sector. It also can be very complex, but when it is straightforward, it would be nice to have a final standard that provided an elegant, efficient off-ramp. So that could go to scalability, that could go to just how the standard is presented. The off-ramps exist today, but it's a little less straightforward as to how you get to the off-ramp and how it's presented to the reader of the standard. So presenting a straightforward, efficient way past the evaluation of the assumption for those scenarios where it can be straightforward would just make the audit all that more efficient. Thank you.
Thank you, and thank you for the public sector perspectives. Paul, Hunter?
Thanks, Jim. Likewise, as others have said, we're very supportive of the project and the objectives and the direction of it. With respect to working collaboratively with accounting standard setters, well, I think that is ideal. I think, however, the IAASB cannot necessarily be slowed down by the time horizon that the IAASB might be on, as it might have different priorities and the like. So certainly, if there is an ability to work in a somewhat collaborative manner and in a similar time frame, I think that would be certainly a very useful outcome. But I would caution the board here not to be find its timeline overly delayed because of different priorities by the IASB. I think this is an important project, and it is critical to improve the guidance and direction for the auditor responsibilities with respect to going concern evaluation. And with respect to reporting, as I mentioned on the other project, increased transparency is always going to be helpful. So I would encourage the task force and the board to think about the ways where the audit report can be more transparent, and continuing to look for opportunities to remind the audit profession that fundamentally the audit profession is in a communication business, and therefore greater transparency and greater clarity on what the auditor has done and what the auditor has concluded can only be helpful to the consumers of the audit report. Thanks.
Thank you, Paul. And actually, your comments were a great setup for my next for calling on Henry because of what you said. So Henry, some thoughts?
Thank you, Jim, and thank you, Josephine, for the presentation this afternoon, and obviously for all of the very careful, detailed work that's gone in to get to the spot you are with the project proposal, comprehensive project proposal. And I just wanted to just sort of acknowledge and thank you for highlighting what I hope and think has been the sort of the mutually beneficial engagement between the IAASB and the IASB on this particular matter over some months now, and the sharing of the feedback that we've done between ourselves. And I also sort of note the comments that we've been hearing in this discussion just on that engagement and dialogue. So I note those comments from colleagues around in this discussion. I just wanted to just say one or two words quickly, a bit more of the background to some of the comments that were about the IASB in the cover note, and just bring everybody up to speed where the IASB is in this area. So as highlighted, we've been undertaking our own public consultation on our work plan that's for the period to 2026, and that consultation was last year. The board has taken stock of that feedback and has started its decision making, and it's sort of now coming up to sort of make its decisions on specific projects that it might add to the work plan in that period. So I think what the next steps are, there will be a paper discussing potential projects that could be, any work that could be done on going concern coming to the IASB at its March meeting before I think sort of final decisions about what particular projects are going to go onto the agenda expected in April. And I just thought it's just worth highlighting, emphasizing some of the sort of the background as well, which is it's just that the general feedback that the IASB got from its consultation sort of largely supported the existing overall balance of the IASB's activities, and also the importance of prioritizing the existing projects and concluding those. So people weren't telling us to stop working on things. So, just coming back to the point that Paul just made really is that the existing projects are going to be the focus for the next 2 years. So I think the question facing the IASB is what should be lined up for it to add to its agenda after that time, bearing in mind also that it won't be starting with a blank piece of paper then either. So turning just to the feedback that we got on going concern, the way I would characterize it is to say, most of the feedback is sort of saying that in the accounting reporting requirements, the pieces of the puzzle are there between particularly the sort of the specific requirements on going concern in the financial accounting requirements, and also the more general requirements about disclosures of significant judgment. But I think what a lot of the feedback is saying is it would be helpful to have those disclosure requirements better integrated and in one place, and that could help enhance the quality of disclosures provided. And it's not unlike really what the New Zealand standard setter did a couple of years ago, and also what the IASB did in some educational materials last year. But having said that, some of our stakeholders, like the IAASB, did encourage broader reconsideration of the requirements in IFRS standards, and it's a sort of the broader thing on actually the process of assessing whether the going concern basis is appropriate. So I just hope that's sort of useful for people to hear a little bit about our context and our timeline, and also the specifics of the feedback that we heard. There's been no decisions yet made by the IASB, but they will soon be considering very carefully the feedback that we've received and whether we should be adding a project onto the agenda, and also if we did, what would the broad outlines of any scope of that project be? So thank you, Jim.
Thank you, Henry. And thank you for that background perspective. Josephine, I see you have your hand up.
Thank you, and thanks again, Henry. And yes, we have been working very closely together. We see each other quite frequently now, various different meetings. I did want to also respond to Paul's point as well, because I absolutely agree. We certainly are trying to represent the project in the context of what we can do within our remit, which is to strengthen the current standards, seek to clarify where there's confusion within them, and enhance them where we believe that enhancements needed. For example, that there should be more robust assessment of evaluation of management's assessment, for example. So we've been very careful to put forward proposals of actions where we can do those within our remit, and we wouldn't therefore need to align ourselves with, for example, any financial reporting, any changes in the financial reporting framework, or any project of any accounting standard setter in that environment, and align with them in terms of project timing. So that's our focus in this project. That doesn't mean, as we've just been talking about, that we won't continue to collaborate. Of course we will. We will continue to have meetings, talk about the various different actions that we're undertaking, share our ideas, share our stakeholder views, etc., because that's very important as part of our collaboration more holistically. But do bear in mind that what we have put forward is within our remit, and it is about, again, reiterating, strengthening, clarifying, and enhancing the current standard to support the practitioner in their work on going concern and also have greater transparency for users. So hopefully that's helpful to set the scene a little bit more.
Thank you for that perspective. Galen.
Thank you, Chair. So I agree with a lot of what has transpired in this discussion. I particularly agree with things that Barbara Vanish said about third-party information and being able to go through that and sort of tailor it to particular circumstances. And I agree with what Christian said about there not being a silver bullet. On the other hand, this seems to be a recurring topic that has been around. It seems to rebound constantly, and that sort of tells me that it needs to be something that is looked at periodically, and that perhaps in the current environment something isn't working. So I think it's good that you've laid out the path that you have, and I do support that. Some say that going concern is just like any other uncertainty and contingency and just needs to be disclosed in the footnotes. I believe it's a fundamental assumption. It is a fundamental assumption, and it goes to the survival of the company itself. And investors, despite that notion about just disclosure of an uncertainty, have indicated that they want going concern transparency reflected clearly in the audit report. And so I won't belabor the point. I'm very supportive of where the IAASB is going on this. Thank you.
Thank you, Galen. And I guess we have to point out there are different standard setters on the accounting side. So that's always a consideration. Paul?
Thank you, Jim. I didn't want to miss out. I'd heard the two other pools, so I guess I'm the third and final arm of the pool trial.
Start using last names only. Thompson, you're up.
I heard it called out twice, and I thought, bugger me, did I accidentally put up my hands without meaning to say anything? Anyway, I have decided to say something. First of all, EFA for SMEs, we did respond to the IAASB's third agenda consultation, and we did in fact encourage the IAASB to prioritize the project outline around going concern. We did specifically actually say that they needed to review the duration of the look forward period, possibly considering extending it. Now, having said that, obviously the IFRS are applicable to public interest entities largely, or listed entities rather than SMEs. Obviously, in relation to SMEs, we would perhaps be concerned that pushing forward this look forward period could be a bit more problematic, because maybe SMEs on average are younger, smaller, more likely to be in a startup phase. So it might be rather more difficult to plot 12 months out from the date that the financial statements are published, for example. So that was one comment that I had. The other comment that I had, already Hyson has applauded the steps to ensure that scalability is baked into this project right from the get-go. And looking through the papers, there's constant references to scalability, which is encouraging. We're really happy to see that. But that being said, it kind of does raise the question, because each of these projects now is coming up one after another. Audit evidence is next on the chopping block for tomorrow evening, my time. And there's constant references to, we've looked at the guidelines, the draft guidelines of the CUSP project, and we're in line with that. And I'm just kind of wondering whether there is actually perhaps a process step that could be introduced, maybe at the final stage or at some interim stage during project development, where somebody from the CUSP just gives us some kind of assurance or comfort that in actual fact this project does appear to have followed the guidelines of the CUSP. Because I'm just concerned that it could just be a very throwaway comment. You know, I'm not distrusting the likes of Josephine and her team and the other teams on the other project task forces, but I'm just wondering, is there any way of us kind of getting some comfort and assurance that those guidelines of the CUSP are in fact being baked into each and every project, even if it was simply a member of the CUSP project having glanced over the project and saying, there's nothing come to our attention that might suggest the CUSP guidelines are not being followed. I don't know, just a throwaway thought there on.
Thank you, Paul. Billy, you had your hand up. Did you want to interject something?
Yes, thank you, Jim. And maybe just coming in on Paul Thompson, talking about the CUSP. So you would have seen that in most of the papers that is going to the board next week. Most of the project teams have made reference to the draft CUSP drafting principles and guidelines, because it is very much a draft. Originally, when we were still thinking that the board meeting next week will be a full in-person meeting, CUSP was actually planned to be on the agenda so we can complete that project. But because of the reprioritization and pivoting to a hybrid meeting, we lost some plenary time. So the CUSP project is now slated to come to the board in April. So the idea is then in April, we will finalize that project. So we will have the CUSP principles and guidelines. But everybody also needs to accept that that is version 1.0. You know, the CUSP drafting principles and guidelines is obviously that type of document that it will need to be a living document. You know, we need to have a starting point, and it will probably evolve as we go on. And Paul, to your point, what we've discussed internally is probably, as we go forward, the need for a type of a CUSP champion. But I can, for example, assure you that last year in December, when we finalized the ISO 600 standard, we actually specifically sent the task force send that project, that standard to the CUSP project staff. And they actually did a thorough read out of it and pointed out some items and things that need to be improved. So I think what you will see in April when we discuss this, you know, it's one thing having the CUSP principles and guidelines finalized and issued. And yes, it's version 1.0. We will carry on as we go. But it will also have to come with discipline. It will have to come with discipline at the board level, at the task force and working group level, and at the staff level. So your point is well taken.
Thank you. Wei.
Oh, thanks, James. Thanks for the presentation. A very quick comment. I just would like to express the support for this project from the perspective of capital market stakeholders. I welcome the proposal to enhance ISA 570 to improve the audit quality. And that's all. Thank you.
Thank you, Wei. Kazuhiro.
Thank you, Jim. I have a brief comment. I'd like to, and thank you for good and to the point presentation. I'd like to pick up 2 points. First is to strengthen communication with TCWG. That can be expected to have the effect of drawing the attention of the TCWG and encourage them to take concrete actions expected by shareholders and investors. And next, disclosure in audit reports. Regarding disclosure in audit reports, information on the on a going concern should be more important than key audit matters for users. However, at present, the disclosure content is less conspicuous than CAM. And I agree with the proposal of the project proposal requesting the addition of disclosure similar to CAM. Thank you.
Thank you, Kazuhiro. Billy, if you could just, I'm not sure everyone, I guess we talked about CUSP a little bit, but what essentially it's the acronym and what it stands for.
Okay.
We use that acronym a lot, but I'm not sure, 100% sure everyone knows it.
Yeah, no. Sorry, Jim, I should have thought about that because we like our acronyms and we always assume everybody knows what we mean. But so CUSP is just a shorthand for complexity, understandability, scalability, and proportionality. So remember, based on the feedback we got from our initial discussion paper on the LCE project, we bifurcated it into two streams. And we said, well, there was clearly a need expressed to explore the development of a separate standard, which is, I can describe it, the LCE standard is a complete proportionality solution in terms of writing a standard that applies, that has requirements that address circumstances when the entity is less complex and doesn't deal with complex matters or circumstances. But alongside that, we also heard from respondents that there are some general issues that apply to the ISAs more broadly, and that's why we started the CUSP project. And remember, the last discussion the board had on this was in April last year. And again, in an ideal world, we would have wanted to come to consecutive board meetings, but again, certain prioritizations had to be done last year. But at that meeting, we presented the draft CUSP drafting principles and guidelines. And remember, the idea is that is an internal document for staff when we draft the standard, but we want to be transparent about it. So we are going to finalize it with the board and we're going to post it on our website. And as Paul Thompson has indicated, then there will clearly be an expectation that we hold ourselves to that. But important also, it is about the project also indicate it is forward-looking. If we want to go back, then we're talking about an enormous project. We're talking about Clarity 2, and I don't know that there's a big appetite for that at the moment. So, but quite right. So we will finalize that in April, and then those guidelines, and like we've illustrated in our papers since almost Q3 last year, is that a lot of the task forces and working groups are already very conscious about those principles when they do the drafting.
Thank you, Billy. I think that was helpful. All right, Josephine, we had lots of comments on this particular subject, so I think that's very good feedback, but I'll let you respond.
Yeah, there was, thank you so much, Jim, and thank you, everybody. Yeah, fantastic feedback today. Really, really appreciate that for both projects. One of the things that Hyson alluded to, and Billy's just touched on as well, which I wanted to, just in hindsight, thought I'd just mention, scalability and proportionality. Obviously not specifically called out here on these slides today, but of course those considerations are very much a part of any project that we undertake, and certainly in the development of our requirements and our application material as well. So didn't want to give the impression that they weren't part of the project. They very much so, and they're discussed, of course, under, you'll see those under the table, which is in paragraph 32 in the going concern, and then I think it's 28 or 21 in the pie. But yeah, very much part of the consideration as we go through each of the actions. And proportionality, of course, was one of the topical conversations we had at one of the roundtables with the SMP community, and ways in which we might think about that came up. But that's more in the granularity of how this will all come together. But yeah, I think that was the only other point that I wanted to make there, Jim. So thank you very much again.
I was on mute. Thank you. So we will move into our next session, which is the private session. And in that session, we'll need a couple minutes because a number of people will be exiting. And this will be solely for the CAG members. And Josephine, I forgot to say thank you for all your time this morning. We really appreciate you coming back to talk to the CAG, hear our feedback, and we very much appreciate it.
Thank you. All right, goodbye. Bye.
Thank you, everyone. See you tomorrow.
Yes, you will.